Look, it's going to come down to three major things whether you should go the owner finance route or try to get a traditional mortgage through a lending company. How much money do you have in your pocket? What's your credit score like? And do you have a job? Not just do you have a job, but do you actually report income and you can show proof to the bank that you can make those monthly payments? Based off of these top three things, you might not really have options anymore. Some people might only be able to go the owner finance route, and some people might only be able to go the bank route. Today, what I'm going to be covering is going to be owner finance versus a traditional mortgage. Which one is better? I'm going to be covering pros and cons of both loans because both loans do have pros and cons. And at the end, I'm going to give you my personal opinion of which one I think is better. And ultimately, what I'm trying to do here is give you guys knowledge, give you information and facts so that you guys can be knowledgeable and feel empowered whenever it's time for you guys to buy a home. Maybe you're planning to buy a home in the near future, or maybe you're looking at these options today. If that's you, you've stumbled across the correct channel, the right real estate agent, because in this show, I talk about actual information that can help you own a piece of the valley. My name is Josue de la Torre. I'm a trusted real estate agent here in the Rio Grande Valley. So technically, welcome to the very first episode of The Real Estate Show. Let me break it down to you cleanly. I know a lot of you already understand the differences, but for the people in the back, because I get a lot of calls from people who see my ads online, they see me posting owner finance properties. Let me start by saying that owner finance is not a program. I get a call and people say, hey, do you have any other homes? Are there any other owner finance programs that you have? It is not a program, guys. You can go to the county office. There's not anything that you can really do to get an owner finance home besides dealing directly with the seller. There's not a program with the county. There's not a program with welfare, with insurances, because you're a single parent, a single mother. None of that matters. It's not a program. It is a deal directly between the seller and the buyer. The seller says, I want $250,000 for my home. The buyer says, I want that home. The seller says, give me $50,000 down, and the rest of it, you can give it to me in payments monthly. You guys shake hands, deal done. You will very likely still be seeing the seller or talking to the seller at some point in time, because now they are the bank. They financed you the property. They gave you a loan for their home. Now, how does it work with a bank? Very similar. Seller wants $250,000 for the home. Buyer's willing to pay the $250,000, but the buyer says, wait a minute, I don't have all of that money in cash. So what do we do? And so the seller says, hey, well, go get your own loan. Go to the bank. The buyer goes and knocks on the doors of the bank, fills out an application, goes through all the hurdles. The bank says you are pre-approved, you are approved for that loan. At that point, the buyer and the seller have already come to terms, and the buyer gives a down payment to the bank, not to the seller. The buyer gives a down payment to the bank. The bank ends up paying the seller completely outright for the price that they agreed on. The seller can go do whatever they want to do with that money. They can go put it on black, just go spend it on another home. And you, the buyer, now are in a commitment with the bank to give them monthly payments, monthly installments, until you finish paying off that home or you refinance with another bank. Now let's get to the pros and cons of owner finance. Now I'm going to be looking at my screen, but before that, if you guys have questions about either one that I did not answer in this video for whatever reason, or you need clarity, call or text me using the information in the description down below. Owner finance pros. Here we go. Here are the good things about owner finance. Number one is it's an easier approval process. I can almost guarantee that. There are lower credit requirements. So pretty much even if you have horrible credit, which the majority of owner finance applicants or people looking for owner finance, they call because they have low credit scores. There's flexible income documentation. Let's just call it what it is. If you don't report your income, but you make cash, I mean, number one, you should be reporting your income, but in case you don't, and you know you make money and that you can pay a home, that's going to be between you and the seller. If the seller's willing, which 9 out of 10 times they are, they'll still finance finance you the home. Faster closing. Typically in an owner finance home, I've helped clients move in from 1.5 to 2.5 weeks when a regular loan normally takes about a month, 30 days. This is a good loan for self-employed individuals or cash earners, again, that do not report their income. So for all the self-employed people out there that get a lot of cash payments, and again, they're not reporting it, but you should be reporting it, then this might be a good property for you. Now, here are the bad things, the cons about owner finance. Owner finance typically has higher interest rates, typically. Sometimes there are shorter terms, and let me explain to you what I mean. Normally, you're going to have an owner finance property, or just any loan, home loan, for about 30 years. But there are some owner finance properties that say, hey, I'll owner finance you this property for the 30 years, but in 5 years, I require a balloon payment, meaning that you got to pay me out in whatever way, whether you win the lottery or you're just giving very aggressive payments for those 5 years, or the most popular option and the best one is going to be you refinance that loan through your bank. So that pretty much gives you an easy entry into owner finance. And now you have 5 years to clean up any mess that you had that didn't allow you to get a bank through a loan. But if you guys do not do that and you sign on the dotted line that you will do a balloon payment in 5 years, again, balloon payment means you refinance or you pay the owner out in full, you might have a foreclosure waiting for you at the end of the 5 years. Now, typically, owner finance sellers can be a little bit more flexible than the bank. You're not calling a 1800 number to try to renegotiate terms. You can probably call the seller directly and they'll be able to help you out a little bit more. Hey, can you give me 1 more year? I just need to report this year's income, and that way I can refinance. So watch out for that. Larger down payments. Sometimes owner finance, for the majority of the time, they require a lot bigger of down payments than a regular bank does. I've seen anywhere from 10 to 20% down. I've seen some lower ones, but just to not get anybody's hopes up, because I hate to do that, let's just be real with you. They're going to ask you for 10% down, let's say at minimum. Let's say this house is worth $250,000. That means that automatically you got to be giving $25,000 down plus any associated closing costs. Typically, closing costs can be a little bit lower because there's no bank involved, but I would still consider anywhere from $5,000 to $7,000 in closing costs in case there are commissions, title company, or there's just an additional fee on there, because owner finance deals can be very tricky sometimes. There can be so many loops in between, but keep in mind that large down payments are required for most owner finance property. Now, here is a huge one, a con. This one is a bad thing. The paperwork can be very risky. So it is a risk if paperwork isn't structured correctly, meaning if you do not structure an owner finance deal, if you do not get a title commitment, if anything sticks to you and you're already buying an owner finance property, title commitment. You need a title commitment for an owner finance deal or for any home that you are purchasing, period. Especially if you're not very knowledgeable on the real estate industry. Guys, this can put you in a very bad situation. If you do not do your due diligence, if you do not have a professional working with you, and if the paperwork is done incorrectly, you might be liable for a ton of other debts that came along with the property, or you might not be liable for them, but somebody's trying to collect on those debts that are attached to your property, and now you run the risk of losing that property through a foreclosure, a lawsuit. I don't know. That's why it can be very risky if you don't do it. So there's a lot less consumer protection, which is another con for owner finance homes. What do you guys think so far? Let's get into the pros of getting a home loan through the bank. Typically, with a bank loan, you get lower interest rates. I don't care what your uncle says. I don't care what you hear on the news. Interest rates are so high, etc., etc. Getting an interest rate through the bank is going to be your best chance of getting the best deal. Very few owner finance properties are going to say, yeah, give me a 4 or a 5% interest rate. Lower interest rates do come through the bank, and and you have the option of buying down that interest rate to a certain point. Banks do have a long-term or stability. If you get a 30-year fix, you have long-term stability. You can keep that loan for the 30 years if you wish, but if you want to refinance, you absolutely can. I don't know where this term came from specifically, but people call it an open contract here in the Rio Grande Valley. If you win the lottery the next day, the first thing you do is give me a call so we can get you into more properties. The second thing you might want to do is call your bank and give them the lump sum. If you want to pay off the home, you can pay it off with no prepayment penalties. That is entirely up to you. So there is, again, long-term stability, and you have options. You're not rushing to fix up past mistakes so that you can get into a regular loan. You're already in one. If you want to stay to the 30 years, that is entirely up to you. Strong legal protection. When you buy a property through a bank loan, like I mentioned, title commitment. The bank is not going to let you close on the property. They're not going to lend money on that home unless you have a title commitment, unless the paperwork is done correctly, structured properly, legally at the title company and their attorneys, and that is where the exchange of hands is going to happen. Builds credit. Yes, a bank loan can help you build some credit. Other creditors do see like, oh wow, look, this person has their own home, and then on top of that, it does add age to your credit profile. At first, you're going to take a dip. That's perfectly fine. You're going to take a small hit, and then after that, your credit's going to come back to normal and continue to stabilize. Lower monthly payments, huge one. Because the interest rate is a lot lower through the bank, then your monthly payment is going to be a lot better than what you get to an owner finance. Let me just give you an example. Recently, we are in 2026. This is the month of May. I've been giving people some options between owner finance and buying a home through the bank. So in owner finance, they have about $2,200 in payment for just the home alone, principal and interest. And then that same home through the bank, they're paying $2,200, including principal, interest, taxes, and insurance. So lower monthly payments are a huge possibility. Now let's talk about the cons of going through a bank loan. And in my opinion, there's not really anything bad about going through a bank loan, but these are just the things that give people some heartburn that they don't like to face. Let's get into it. Number one, strict approval guidelines. Yes, the bank does have stricter approval guidelines compared to owner finance. The bank is not in the business of trying to foreclose the home. What the bank wants is for you to make monthly on time payment. So they're going to make sure of that you have a good track record, that you have a decent credit score, because to be honest, in my opinion, on the credit side, it's not even that strict. You only need a 580 credit score and you can get approved for a low down payment with an FHA loan, 580 and above. Remember that. Income documentation required. This is super important. If you are not proving that you have income, this is an example. Let's say you are a scaffolder or you're a 1099 employee. Just giving examples I've run into, and you make $100,000 a year, but in write-offs, you use everything: toilet paper, cell phone bills, foods, gasoline, all of that equals out to $90,000 in deductions or write-offs, then you're really only showing the bank that you made $10,000 in profit or actual money that's staying in your pocket for your home. So the bank's gonna hit back with the following question: well, then how are you going to pay me a home if you only have $10,000 a year that is truly yours that you can pay a mortgage payment? So income documentation is required. They will ask for tax returns. Sometimes they will even go onto the IRS website, or actually they always go into the IRS website if you're a 1099. If you're a W-2, it's a little bit different, but just keep that in mind. Income documentation is required to go through a bank loan. There are some exceptions before any mortgage lender says, oh, but what if you do a bank statement? Whatever. Just in general rule of thumb, you're gonna have to show proof of income one way or another, period. Now, credit score matters with a bank. I already mentioned this in the first point, but your credit score is super important. It's gonna determine a couple of things: how much your points are gonna cost to buy down your interest rate, what interest rate they can give you naturally or organically without having to buy anything down, what type of program do you qualify for a down payment assistance, or can you only go the FHA 580 3.5% down? It's gonna matter. Credit score is an important thing if you are trying to get a loan through the bank. Now, the last con is that there are so many things that can actually kill the deal, right? That's why it is important to work with a real estate agent so that we learn how to manage and navigate through those bumps. So many things can kill the deal. Inspections, which everybody should get an inspection. And if you need to kill a deal because of an inspection, the property came back super faulty, then yeah, kill the deal. But so many other things come in play because there are so many moving parts. There's an appraisal, there's inspection, there are family members cheering you on or booing you when you're trying to buy the properties. There's so many things that can go wrong in those 30 days that you are going to close a home, because it typically takes 30 to 45 days. And if you're doing a new construction property and you are building from the ground up, there are so many more things that can happen interim of that construction. So there are, again, too many things at play to say exactly what can kill the deal, but things can kill the deal that might be out of your control. But the good thing is that you can always go and shop anywhere else because you have a pre-approval letter from the bank. Now, with that last point, I want to make one more contrast between either option. If you are going for an owner finance property, I will say this: you will be very limited to the amount of inventory, the amount of homes that are available for owner finance. In the last 2 weeks, I have probably seen about 20 max owner finance properties available in Cameron and Hidalgo County. So there's not a lot of homes available. So if you don't like that one owner finance property is painted white instead of beige, and that is the only option you have, then that is the only option you have. And you have probably 19 other options, and that's it. And I'll be honest, not all of them are brand new construction. Some of them are fixer uppers or out in the boonies, so many different things. Now, if you're going with a regular bank, you have a pre-approval letter. The pre-approval letter says as long as it is within the area in which you live, and as long as you're staying within budget, let's say 250, then you can go buy a house in Rio Grande City or in Brownsville, and anything in between you can go ahead and purchase as long as you stay within your budget. So the inventory amount opens up tremendously when you go through the bank. Okay, so which loan should I pick? Okay, so throughout this video, you've probably already decided in your mind which profile you fit best into, whether it's owner finance or going through the bank. Now, there are a lot of outliers. So before any mortgage lender or realtor says, oh, well, what if this other type of loan that's good for high credit score and I'm just going to give you guys a basic understanding, a basic rule of thumb, and we'll go over your options through a phone call. That's going to be the best way. But owner finance might be better for you if your credit is below a 580. You cannot prove your income. You need a fast approval. You are rebuilding currently. You've had previous repos, late payments. Now you're making money and you can actually pay, and you're planning to refinance later, or maybe you're not planning to refinance later, then owner finance might be the best and only option for you. Now, a bank loan might be better for you if you have a 580 plus credit score, you have stable income that you can prove, you want the lowest long-term cost, you plan to stay within a loan, and you don't want the pressure of having to refinance or pay out the bank quickly. And if you want a predictable payment for the life of the loan, then very likely the bank option is the best one for you. If you have a low credit score below a 580, if you don't have any savings to give towards a down payment, then you have no business looking for a home at this moment. And I don't say that rudely. What you should be doing is getting a job that gives you enough money to save up so that you can purchase a home, whether owner finance, or gives you some money so that you can pay down your credit card bills and be able to qualify for a home loan. So to keep this video short and sweet, I'm going to talk to you guys about the real cost comparison. I'm not going to go into the numbers in this video, but I'll probably be making another video about what the difference in cost and the specific numbers are. But the reality of it is, buying a home through the bank is always going to be cheaper, or at least 9.999 out of 10 times going to be cheaper than owner finance. It doesn't take a rocket scientist or mathematician to know that at a 6 or 7% interest rate, you're going to be paying significantly less over 30 years than you will at a 10% interest rate. And that is a fact. Numbers don't lie, guys. One more golden question. Which one do I think is better for you? Well, that doesn't really matter because I'm not going to be the one putting my family into that home. I'm not going to be the one making the monthly payments, and I'm not the one who's going to be using my savings to start my home journey. I always tell clients this: whether you're buying a home owner finance or you're buying it through the bank, the best option always comes down to you. What is right for you, the buyer? If you feel that you need to purchase a home ASAP, or if you are already itching for a home, you've explored the bank routes and there's no option for you out there, but you can do owner finance, and owning a home is something that you truly want to do, then owner finance is the best option for you. Will I say that I prefer a bank loan? Yes, 100%. Me personally, I'm going to advocate for a bank loan 9 out of 10 times. But if the only option you have is owner finance, then by all means, go for it. If you want to go the owner finance route for whatever odd reason, but you can go through the bank, which I've had people do that in the past, but you know what? You don't have the savings to go owner finance, then hey, you have the bank option that's available for you. Not everybody has the same credit and income profile that you do. Dude, just go and get a bank loan. That's going to be your best option. Again, that is if you are willing to pull the trigger on it. Just because you have either option, you might have both or you might have one. Just because you can doesn't mean that you should. The question comes down to, are you ready to be a homeowner? Are you committed to make the monthly payments? Do you understand the risk of both options, owner finance and buying a home? If you do, that means that you've already set in your mind that you want to purchase a home. And I congratulate you, because buying a home is one of the most wonderful things I think people can do, especially when they have a family or want to build equity or have something that they can pass down or sell. All right, so some of my lights died because I've been rambling on for too long. That's a good sign to end this video. But if you are looking for a property and you are trying to either go the owner finance route or trying to buy a home through a regular loan, then you need to call me, because I covered just very surface level information in this video that might not pertain to you. There might be more questions that need to be asked so we can find out exactly what you would qualify for, how you would qualify for, and what home is right for you and your family. Thank you guys for joining in. This is the Real Estate Show, where I focus on talking about points that matter, information and questions that I get asked all the time, and that really it seems that nobody is talking about here in the Rio Grande Valley. Till the next episode and the next topic, my name is Josue de la Torre. I'm the Valley's trusted real estate agent, and my job is to help you own a piece of the Valley, because everybody should invest, buy, and sell real estate.